Hi everyone, Scott Smith from Cairns Finance is back with us to talk about first home buyers and the changes that are coming up to the scheme. So Scott, over the years, as I guess most people would know, there's been lots of different schemes for first home buyers, sometimes for new property, sometimes for existing, sometimes it was a bulk amount of money. What's the new scheme that's being talked about since the federal election? Can you tell me a bit more about it?
Yeah, so that's something that both sides of politics put out just prior to the election, and certainly the current government is in favour of putting together a low deposit scheme there. I guess traditionally there's been a few ways that a first home buyer can get their deposit together to buy a property. Of course, nothing beats their genuine savings over a period of time. And generally speaking, the minimum deposit is about 5%. So for those people that have saved 5% of their purchase price of the property and can cover some of the costs, have always been able to provide enough of a deposit to buy. The preferred deposit is 20%, and that's a big stretch, particularly
for a lot of money.
Yeah, for a first home buyer without any property equity. It's their first time into the market. That's a tall order, but it's the preferred one of the banks.
Why is that preferred?
Well, it avoids a little acronym called LMI, Lender's Mortgage Insurance.
Okay.
That protects the bank. It doesn't protect the home buyer or the borrower.
Right, so it adds a fair bit of cost when you're looking at buying a home if you've got to pay it.
Yeah, absolutely.
Yeah.
You know, the cost varies according to how much equity you have and the bank you use and the amount of the loan.
Okay.
But it could be a couple of $1,000s. It could easily be $15,000 or $20,000.
Yep. So with the new scheme that's coming out, I'm guessing that's affected the lender's mortgage insurance?
Yeah, and that's the main benefit of it, Heidi, is that the bank will, the government will provide a guarantee for the remaining shortfall between the genuine savings of the borrower.
Which might only be, say, 5%.
Yeah, 5% is still the minimum. So everyone's still got to have a 5% deposit pretty well. But the government is going to top that up. And provide that, let's say 15% there. So the homeowner is going to have a bigger mortgage, but they're not going to have to spend that money on lender's mortgage insurance, which will be a good saving.
Yeah, right. So in dollar terms, say on an average house price of, say, $400,000, for example, what's the dollar savings there?
Yeah, again, dependent on the bank and how much of a deposit, but it could easily be $12,000 to $15,000. Wow. It's a good saving.
That's significant.
Yeah.
So what would you suggest that first home buyers do if they are thinking about getting into the market?
Well, savings. Save, save, save is the mantra for everyone looking to buy a property. You know, the more you've got in the bank, the easier it's going to be to get the money from the bank.
For sure.
So, develop those genuine savings patterns now. Put aside that money. You know, if you're paying $500 a week in rent and the repayments are going to be $600 going forward, prove to the bank that you can put in that extra $100.
Okay, fantastic. Well, thanks very much for joining us and look forward to our next chat.
No worries. Thanks, Heidi. Thanks for having me.